Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing regarding Nifty, Bank Nifty, the key levels to watch out for in trade, as well as the main sectors in focus in trade today, as well as the next few trading session. First up, coming to the update in the global markets in trade on Friday. So we had the Fed Chairman Jerome Powell's remark at the Jackson Hole Economic Symposium, which he stated that the time has come for policy to adjust, which sparked optimism in the US markets. This led to a strong rally in trade on Friday, with the Nasdaq advancing 1.4%. We had the S&P 500, which managed to end the day 1.5% higher, while the Dow climbed 1.3%. Going ahead, the S&P 500's previous all-time high, that is the levels of 5,670, stands as the key resistance level. If the index can break and sustain above this mark, it could propel a rally towards 5,750 and potentially 5,840 in the short term. Coming to Brent oil has taken support near its previous swing low of $75 a level and thereafter witnessed a smart rebound. However, it is still trading below its short-term and long-term moving averages. Most noteworthy, the US dollar index, that is DXY, has witnessed a sharp correction and ended at 100.67, which was the lowest weekly closing since July 2023. This correction signals a positive outlook for emerging markets such as India. Coming to the update regarding Nifty. So Nifty, for the second consecutive week, the benchmark index has posted gains with all the 5 trading sessions closing in the green. Currently, it is trading at a stone throw distance from its all-time high. As the index is trading near its all-time high, all the moving averages and momentum-based indicators are suggesting strong bullish momentum in the index. Going ahead, the levels of 24,950, 24,980 will act as the immediate hurdle. Any sustainable move above the levels of 24,980 will lead to a sharp rally towards 25,100 followed by 25,220. While on the downside, the zone of 24,800, 24,770 will act as the immediate support for the index. On the derivative front, if we see the open interest of the all the series combined has surged by 3.92%, indicating long build-up in the market. Among the constituents of Nifty index, 13 stocks have witnessed long build-up, 7 stocks have witnessed a short covering rally, while 19 stocks have witnessed short build-up and 11 stocks have witnessed long unwinding. Now coming to the update regarding Bank Nifty. So for the second consecutive trading session, Bank Nifty has sustained above its 20 and 50 EMA levels, which is a bullish sign. The daily RSI and stochastic have already given a bullish crossover. This clearly indicates that the banking space is slowly regaining strength. Going ahead, the gap zone of 51,300 will act as the immediate hurdle for the index. Any sustainable move above the levels of 51,300 will lead to a sharp upside rally towards the levels of 51,800 followed by 52,300 in the short term. While on the downside, the zone of 50,700 will act as the immediate support for the index. Coming to the option chain data for Bank Nifty, so at the current juncture, 51,000 strike has significant call open interest followed by 51,500, and on the put side, 50,500 has substantial open interest followed by 50,000 strike. Coming to the key market indicators, so on trade in Friday's session, the volatility index India VIX surged by over 4%. Despite this spike, it remains below its short-term and long-term moving averages, indicating that the overall market volatility is still relatively low. In trade on Friday, the advanced decline ratio remained relatively flat. Now coming to the sectors in focus, so recently Nifty FMCG has given a consolidation breakout. The momentum indicators and oscillators are also supporting the overall bullish chart structure. Further, Nifty Auto has also given a consolidation breakout on Friday. Hence, we believe the outperformance is likely to continue in frontline indices. On the flip side, Nifty Realty is likely to underperform the frontline indices. Coming to the FII DI data, both FIIs and DIs were net buyers on Friday to the tune of 1,944 and 2,896 crores respectively. FI long short ratio for index futures is at 52.3 on a net basis. This as they purchased about 748 index futures. That's a wrap of today's edition of the podcast. Thank you for regularly listening. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.